Joe, you know, that's where I'll start. It feels like there generally is a malaise over the market. And we had a conversation yesterday. You were on the program. Jim Cramer came out and said this.
I just find I don't have anything exciting. Nothing intrigues me. I'm not saying I'm bored, because no market is ever boring to me. But, Scott, I just don't have anything compelling enough to say, this is what you buy right here, right now.
All right, Joe, what do you do with that?
I agree with Jim, and I think Jim is taking the perspective of being a longer-term investor. There are things you could do in the market right now for trades, but in terms of opportunities for long-term investing, I agree with Jim. I don't see very many, Scott, and I think now you have expanded the list of concerns that you have for this month beyond thinking about the U.S. consumer. Are they beginning to approach behavior with a little bit of frugality? We've got a looming government shutdown potential. But you now also have concerns related to the Chinese economy. And I'm looking at my own portfolio today. My worst performing stock in my portfolio is Starbucks. Really? Now I have to worry about Starbucks. I have to worry about Apple. I have to worry about Nike. You have to worry about these large cap consumer oriented names because we're seeing such a deceleration in China. So you're always asking yourself the question in terms of long term investing, where am I going to go to put the capital if I'm going to be getting out of something? And right now, the answer to that, it's certainly not cash, but finding opportunities other than maybe natural gas and some oil names is very difficult. I agree with Jim.
We'll talk about cash in a moment, and a very notable investor who weighed in yet again on the idea of holding cash. Yeah. But, Carrie, look at your notes to our producer today, and you said it's easier to be a seller. And maybe that's the bottom line of where sentiment lies today. It's difficult to be a buyer because you're not exactly sure what you should be buying.
Yeah, exactly, Scott. When I say it's easier to be a seller, I'm talking about the market generally. I wasn't speaking about us because we're not sellers. We have sold some stock into this rally, but think about what the market's done for the last 3 years, up 30%, 18% this year, 20%. We're in a pandemic. Still, we're not quite out of it. And the market has just gone higher and higher. It's been grinding away upward. And therefore, it's natural to be worried about what's going to happen with GDP if it stalls, if we don't have the type of growth that the market has anticipated because we were going to be out of the pandemic. And now we have inflation. We can argue about what the level of inflation will be. Yesterday, it was a little better than expected. The market didn't really seem that enthused because we have more inflation. There are costs rising. Companies are talking about raising prices. And until we see those next quarter earnings and more numbers about the future, of course we're going to be worried. And that means stay with what you own that you feel you can predict. There's some predictability about the cash flow over the next 12 to 18 months.